Morning, it's Tuesday, June 14th, 2022. I am Jordan Dove. Hope everyone is well. Got some stuff to share with you guys, and it's not the best of news. As you know, today the Fed begins their two-day FOMC meeting with a 75-point basis hike, very, very likely, and possibly a 100 basis point hike coming today. But guess what? Mortgages are getting absolutely shattered. Mortgage-backed securities are sitting. There are no buyers. Who wants to buy a 5% mortgage-backed security when inflation is like really 15%? It's a guaranteed money loss, and the Fed is not buying them. On Friday, they did not buy them. That's making rates go even higher. Yesterday, my lender was showing 5.75% yesterday. And yesterday, I spoke to some other lenders. They were in the low sixes. Another lender this morning is seeing 6.75. Absolutely nuts. The movement overnight, absolutely crazy. And to quote Bloomberg, worst day for mortgages in decades. But guess what? Wall Street continues to buy rental properties, forcing you and people like you to rent on high-cost leases. The Fed not buying these MBSs is causing rates to skyrocket. The mortgage companies are scrambling as loans sit on warehouse lines with no buyers. Nobody is buying these loans. The Fed has been buying negative return mortgage bonds for a year. Now the Fed slowed buying and panic has set in. Rates are skyrocketing. What will happen is the Fed will either buy these mortgage-backed securities or give a hedge fund a low-interest loan to purchase them. Yikes, guys, not a good thing. The alternative, however, would be an epic mortgage meltdown, and everybody in the mortgage industry knows it. If mortgage companies cannot sell their loans and they sit on the warehouse line, they will not be able to do new loans. It's that simple. And this is why rates are going so high, so they can get somebody to buy these loans and not have a negative return. But guess what? Housing costs and rents continue to soar, highest on record. In Las Vegas, we are seeing a median of almost $500,000. Owning real estate once again protects you against inflation, but still, it's not enough to beat the Venezuela policies that are being enforced, that are being enacted. The things that are happening in our government are not for the working people, okay? The Fed, nothing federal about it. The Fed has completely lost control. America loses confidence in all leadership. You have lost confidence. I have lost confidence. Both sides, both parties have failed the American people. And a major factor in inflation is housing costs and rent. You know this. The Fed raised rates. I'm going to tell you, the Fed raised rates in hopes to bring the costs down. All this did was increase housing costs because it cleared the path for hedge funds to go in and buy more homes with less competition from prospective home buyers and current homeowners looking to move up, move down, whatever. The same fools that admit that they were wrong about inflation, remember, it's transitory, this is going to be a soft landing. These same people, Janet Yellen and Jerome Powell, these trolls under a bridge, right? They are now making one of the biggest economic mistakes in the history of our country by not addressing the Wall Street landlords. No regulation. Hell, at least our northern neighbors, our snow partners in Canada, banned foreign investors for 2 years from purchasing real estate. And what has our administration done? They have done absolutely nothing. These creatures and other foolish, out-of-touch, lifetime politicians, get rid of these lifetime politicians, guys, continue to allow these hedge funds to buy housing and cash, wiping out home ownership, and at the same time, these Wall Street pigs are able to raise rates to astronomical levels. It's frustrating, man. These would-be qualified home buyers, they're being turned into renters and being forced to pay more and more for rent. at the highest levels we've ever seen. Your housing should cost 20 to 30% of your total income. Now it's costing 50, 60, 70% of people's income. That's not sustainable. That's really, really bad. Now we see credit cards are maxed out. During the pandemic, when the stimulus came out, people had more savings than ever. Credit card balances were low. And just a year and a half, 2 years later, we have credit cards maxed out, people living on credit. Not a good thing. Wait until those variable interest rates change as rates go higher. At 24.99%, wait until you see 50%. Something nuts. It's going to happen. And the Fed is going to continue to raise those interest rates and not rectify and come up with a solution for the real problem, which is curbing the median price and skyrocketing rent happening right now. Halt the hedge funds from buying homes immediately. That's what we need to do. Hedge funds are even ramping up right now, guys. Wall Street landlords are not slowing down, and they're getting more money. Can you believe this shit? They're getting more money, right? In fact, more hedge funds are jumping in, and there's so many now that hedge funds that want to get into the game are just giving money to other hedge funds that are already in the game so they can piggyback on them. And, you know, this needs to be addressed on a national and a local level immediately. Unfortunately, it probably won't happen, but it needs to be addressed. Wall Street needs to stop buying properties. They are monopolizing the housing industry, turning everything into rentals, wiping out the wealth of the middle class. Okay? If you don't own property, you're in trouble. Okay? Also, the World Bank recently slashed global growth forecasts and warns of 1970s style stagflation. Now, I wasn't alive in the 70s, but I've done a lot of research. A lot of people I associate with were alive during that time, well in their adult careers, and I am pretty familiar with the subject, and it is not a good thing. Now, once the numbers for the second quarter GDP come out, it will confirm that we are in a recession, because you need 2 quarters of negative growth of GDP to confirm a recession. It's here, guys. It's coming. Just a couple more weeks. Prepare now. Prepare yourselves right now. Things are going to get really sticky. Things are getting more and more expensive. It's really unfortunate. So if you're living off your credits, guys, what you want to do is you want to pay down those balances. You want to have good credit. You want to store up on commodities. If you're invested in commodities, not financial advice, but commodities, I think you're going to do really, really good over the next couple of years. High growth tech, that stuff's going to be rough. But do what you will, not financial advice. Just prepare. There's going to be opportunities. Prepare. You're going to want to have your powder dry, okay? Have your powder dry. It's really important. I just saw on CNBC, they're reporting 30-year fixed 6.28%. 30-year fixed mortgage rate 6.28%. Man, it's gonna get ugly. Been telling you guys this for a while. Sorry I haven't been on as much as I want to. I send out a Monday newsletter. It's the Market Pulse, Real Estate National, Fed Minutes, whole bunch of stuff. If you want to get on that newsletter, send me your email. I will have a subscribe button in the video so you can get that. I also do a video every Monday on that email I send out based on the economics of what's going on. Okay, guys? Hope everyone's doing great. Prepare for what's coming. Don't be left in the gutter, okay? It's coming. Be prepared. There will be opportunities, and stay safe. We'll talk soon.